A parent LLC and a series LLC are both variations of a limited liability company, or LLC, and operate like a holding company, where there's one umbrella company with subsidiaries under it that are each protected from the world and from the liabilities of one another, so all your assets are covered. If you're looking to own and operate multiple businesses in a consolidated way, these are two ways to organize that. Both have a structure where the parent or holding LLC is the manager of the entire process of the group of subsidiaries, as a group and as individuals. All subsidiaries of the parent company must follow their own compliance and rules to get licenses and registrations to keep them in good standing. One of the big benefits is that the parent or holding business at the top can easily share resources across its subsidiaries. Think office space, accounting, human resources, legal services, all that managerial and financial stuff. But parent LLCs and series LLCs differ in a few small ways, and there's one big difference we're saving for the end. Most importantly, though, a series LLC is only recognized by these 18 states. So if you're not operating within these states, or you're thinking of operating in a state that's not listed, then you may want to stick to an organizing strategy that'll work for where you conduct business. How parent and series LLCs work. SCORE describes a series LLC like a grapefruit. The entire object is the grapefruit, but when you open it up, there are individual slices that exist with natural barriers between each other. If one slice gets damaged, it doesn't leak into the other slices. And the entire grapefruit is protected by the shell of the peel. You don't eat the peel, probably. The peel just exists to hold the slices together. If we stick with the fruit analogy, a parent LLC is probably more like a bundle of bananas. There's a handy knob at the top that keeps the bananas organized, making them easier to carry. You don't have bananas rolling all around your kitchen, just loose. Each banana is also protected by its own peel from the others. If one starts going bad, it's not going to instantly spoil the bunch. Each banana can be an independent entity when it needs to be, and often gets treated as such. Make sense? Yes, no, maybe? How about one more time without fruit? Similarities. The process of forming a parent LLC and a series LLC is quite similar, as both involve creating an initial holding LLC or company and registering it with the state. For a series LLC, it really depends on the state. Some states allow you to start one LLC, then add in those grapefruit segments or subsidiary LLCs just by amending your operating agreement. For other states, you still need to file for any new subsidiaries, and sometimes it's even more expensive than starting a completely new LLC. All states that accept series LLCs say that only the main holding LLC needs to file annual reports. But some states still want you to file for your subsidiaries, or they even charge extra reporting fees. Now, what about a parent LLC? A parent LLC is the DIY version of the series LLC. You start one umbrella LLC, the parent. Then when you create or acquire additional LLCs that you want bundled, which are called child LLCs, the parent LLC would be listed as the holder of that child LLC. That parent LLC manages and owns the asset that is the subsidiaries themselves. Differences and downsides. Besides the fact that you have a limited number of states in which you can open a series LLC, there are a couple differences and downsides. First, just know that a series LLC is a relatively new concept and hasn't been fully explored in terms of its legal and protective capabilities. If you're looking to start one, we'd recommend talking to a professional about it first. We've got some links to connect to a few credible professional options down below. With a parent LLC, often you can do one profit loss statement and file your taxes through the parent's tax return. This might be perfect for you and give you lower taxes, or it might be terrible. It depends on what you're up to. With a series LLC, you typically have to do taxes separately for each child. It might be a paperwork headache, or it might save you money. This is the kind of nitty-gritty where a tax professional would come in handy if you're really looking to optimize your taxes, especially since the IRS does not have any official federal rules for this structure. Also, there are a lot of banks that aren't very familiar with series LLCs. Depending on what bank you use, you might have an uphill battle in terms of keeping financial records, opening lines of credit for your subsidiaries separately, and so on. With a parent company, you actually aren't limited to an LLC. Surprise, we saw you in the comments. You can also do this structure as a corporation, a sole proprietorship, or a partnership. There's more flexibility. Again, for those tax and profit optimization nerds, that's where you'd want to talk to a legal pro about what direction to go in. We tend to recommend LLCs since their paperwork is simple, DIY-able, and their protections are solid. Great, that pretty much sums up the differences. We hope you found the answer you were looking for. If there's anything else we can clear up, leave it in the comments below. And don't forget to check out the description for more resources too.